handover at least has been pretty positive as far as the US markets go. On the back of that, you have most of the Asian markets which are trading with good gains.
We must not now break yesterday's low, which is 22,224.
What we are saying in IGL and MGL, their penetration level needs to increase.
So the promoter entity, which is called Prudential Management and Services, is looking to sell close to 93 lakh shares. This is possibly going to be as part of the block deal window itself.
The three companies, be it IGL, MGL and Gujarat Gas, all three of them have cut prices. IGL and MGL, they've done it for their CNG segments, and Gujarat Gas has done it for the industrial segment.
22,500 is here as we open. The Nifty is 22,495. That's the opening. 513. There you have it.
We have now got to know from our sources that the government has very, very recently granted a 500 crore rupee extension to the FAME 2 scheme.
It's a quiet day for the markets as of now. It's the weekly options expiry. Now, what the mandate states is that an upper layer NBFC has to list within 3 years of being notified by the RBI, and Tata Sons was notified by the RBI in September of 2022.
Well, it's a mixed picture as far as the markets are concerned, but we do have a lot of stock-specific action, Vivek.
Well, that's the day so far, and it's been a quiet Thursday. And I want to repeat what I said in the morning. It's Thursday, not Friday, but it is the last day of the week, with tomorrow being a holiday. Long weekend ahead. This, of course, we're coming to you from the CNBC-TV18 News studios. I'm Prashant, and like the morning, we have Surabhi and Mangalam with us here. Guys, hi.
Hi. You said quiet. I just want to figure out what part of the market are you finding some sort of quietness in? Because 22,500 for the Nifty, 74,000 for the sensex. Broader markets, they're on fire after a brief hiatus. And the metals, if there was one, strain of music that the street would be listening to, it would probably be heavy metal this afternoon.
Someone's getting ready for the weekend, I guess. For sure. But, the market's kind of made this habit.
Victoria's Secret in the morning, heavy metal. I don't know. You're making me wonder. Sorry.
Don't make me speak about Tata Chemicals, Tata Consumer Products and Tata Power now.
Yeah, we're absolutely getting into the weekend mode. But, I was just saying that the market's kind of made a habit out of following this pattern. The week starts off with a bit of a mini shakeout, and everybody wonders if some major correction is setting it in, and the week ends with another all-time high. Third time, I think, in 2024, this pattern is repeating.
Absolutely, and there's just points of a day or two of doubt which kind of creeps in, but inevitably it pulls back up again. So nothing large. It's about just not even a 0.25% or so, but it's 40 points, which makes it a newer sort of level on the upside. So in the green, but Bank Nifty, and we were saying this in the morning, it's kind of failed to follow through so many times. It gives you these one-day pops, but no follow-through. Bank Nifty is down today, and the large private banks are not really, they're not down or anything, but nothing after what we saw yesterday. Broader markets are doing better, and I think that is the bigger story. 2:1 advance decline ratio. Last 3 or 4 days, market breadth has been negative, And the small cap index actually is up a full 1%. The last I checked, mid cap index is up a 0.5%. So I think portfolios perhaps would feel a little better, because that's where a lot of people have crowded into. Large caps, we're still waiting for people to crowd into. And there the problem has been that long-time holders are just holding, and newer money is not coming in. The money has been going into some of the smaller names here, which today is doing better. And of course, like you saw and heard here, a little bit of holiday sentiment with the 3-day long weekend ahead. Surabhi.
No, absolutely. Beyond the holiday sentiment, if there's positive sentiment in one particular group in the market today, I just wanted to pull that up. It is the Tata Group. I'm not sure exactly what it is. Maybe Mangalam will have some more inputs on it. But whichever stock you're looking at across sectors is literally on fire. Tata Steel, Tata Power is, by the way, up about 9%. Steel is up about 4.5%. Tata Investments is up 5%. Tata Technologies is up 7%. And Tata Chemicals, the one that Mangla was just alluding to, up about 12%. Something definitely out there. It is this mega, gigantic Tata move that really is the hallmark of trade today.
It is the Tata move, which is the hallmark of trade today. In fact, anything that precedes Tata has been doing extremely well in today's trading session. And it's right that, you pull up Tata Investment Corp, because not only are all the Tata Group stocks higher, Tata Investment Corp is basically the holding company of all the Tata Group stocks. And if you just take a look at the way Tata Investment has moved, not just in the last few trading sessions, but this month itself, been a big mover, constantly hitting upper circuits. This month it's up 75%, and we're just 2.5 months, a little less than 2.5 months into 2024. So if you look at the stock this year, it's a move of over 130%. So that's telling you that, maybe there is something underway in the Tata group in terms of growth and perhaps some value unlocking plans as well. There are brokerage notes talking about a possible listing of Tata Sons, and that explains the kind of move that we're seeing on Tata Chemical. But on the market itself, the next 1 hour will be extremely crucial, because this will also be the first weekly options expiry of the March series. And that's important because we've hit a record high. The Nifty is a little above that 25,500 mark. And if you look at the 22,500 call and the 22,500 put, both of them are seeing equal number of open interest, close to around 3 crore shares on the 22,500 call and close to around 2.2 crore shares in the 22,500 put. Together have an open interest premium of 50 rupees each as well. So those option writers are eyeing a range between 22,450 and 22,550 on the Nifty itself. The reason why there is a cap on that up move is because of the way the Nifty Bank is performing. If somehow the Nifty Bank at 3 p.m. wakes up and says that I want to go into this long weekend with some gains, then this Nifty range breaks out beyond that 22,550, and that would lead to a lot more short covering. So that's something we'll keep an eye out on.
I think Mangalam is willing the Bank Nifty higher, because as he was talking, the Nifty Bank was...
If only.
See a small spike there on the Bank Nifty. You can see that. Yep, there you go. So we're down just about 20 points or so on the Nifty Bank. We'll see. Let's just quickly get you, the closing trades as well. So what do we have? Mitesh is joining us. Mitesh, hi, good afternoon. First, call on the index and individual trades you would take.
So I think on the index, my sense is that we've seen a good consolidating kind of a day today. The Bank Nifty, which is the stronger of the two indices yesterday, is quiet today, and the Nifty also is marginally moved into positive. But the structure with the breakout which happened yesterday remains positive for the Nifty and the Bank Nifty as well. So nothing to worry about. I think the Bank Nifty was some kind of a buying opportunity during the day, around this 47,700, 650 zones. And that's where the levels are. And 48,500 is the near-term target area for me. So I have a positive bias. On the stock side, I have one buy and one sell. PVR, after some kind of a decline, is now reversing from lower levels. So that's a buy. Look for a first target of 1440 here, but I think eventually the stock is heading towards 1480. So buy with a stop below 1400, take some profits at 1440, and then 1480 becomes your next target area. And one sell on Coforge. The IT names, while they've given a pullback, I think the structure remains weak. So Coforge is sell with a stop about 63.30 for targets of 61.50.
Okay, got that, Mitesh. Thank you very much. For the trades, we'll come back to you in a bit for some more ideas. But let's put the spotlight on this big Tata Group rally. By the way, I didn't mention one stock, even Tata Tele is up about 8%. So anything with the name Tata on it is really soaring away this afternoon. We have Hormaz joining in on one of these companies, Tata Chemicals, which is now tracking a double-digit gain. Actually, it's not just today. The last couple of days have been very, very strong for this one stock. Let's pull up a week-to-date chart on Tata Chemicals. Hormaz, any idea what's going on here?
Well, all I can say is a lot of people are saying hello to Tata at the moment, and Tata Chemicals is one of them, and the stock has had a stellar move all this week. Over the last 6 days now, the stock has been moving. It's up almost 40% in this last six trading sessions. Now, why this has happened is because there's a note from Spark Capital that was released earlier this week on the 4th of March, and they said that Tata Sons, the promoter, the parent, the holding company, can see a listing in the next 18 months, which is by September of 2025. And that is because the RBI has classified Tata Sons as an upper layer NBFC. Now, the mandate states that any upper layer NBFC will have to list within 3 years of being notified by the Reserve Bank of India. And Tata Sons was notified by the central bank in September of 2022, which means that they will have to list by September of 2025. Now, what is Spark Capital saying here is that, now, but why Tata Chemicals be surging because of this? According to Spark Capital, there are 4 companies that have stake in Tata Sons, 4 Tata Group companies, and that is Tata Motors, Tata Power, Indian Hotels and Tata Chemicals. But the only realistic way to get exposure to this value unlocking potential, which is this Tata Sons listing, is via Tata Chemicals, and that is because the ownership that Tata Sons has in Tata Chemicals nearly amounts to around 80% of its overall market cap, and the intrinsic value of Tata Chemicals is around 11 times FY25 price to earnings. Now, what they are saying, now mind you, Tata Sons as a share was underperforming both in January and February, was down around 7 to 8% each in both of these months, and this is because of the commodity nature of the soda ash business and the industry-wide headwinds that the companies were facing because of falling realizations before this surge happened. Now, Spark Capital is saying that in case that the street assigns a 10 to 11 lakh crore valuation to Tata Sons during its listing, this intrinsic valuation can see some bit of re-rating if this investment should be liquidated at or post the IPO. Now, because of this surge, Tata Chemicals' valuation has also seen a bit of a surge as well. It is now trading at close to 30 times FY25 price to earnings, which is well above its 5-year average of around 12.5 times. And when you compare that to peers, it is still cheaper than stocks like SRF and Gujarat Fluoro, but somewhere in line with stocks like Deepak Nitrite. So 40%, the stock of the week perhaps is Tata Chemicals. Stellar gains for sure.
All right, stock of the week indeed. In fact, we've written to the Tata Group seeking some clarification on whether a listing of Tata Sons is on the cards, and as classified by the RBI, are they mandated to list? How does that pan out? Just keep an eye out on one fact, that Tata Chem may get into F&O ban today. So for all those people who've taken their positions to be carried forward and they've taken that today, just be mindful of that. You might attract a penalty. So that's something that I just thought I'd put on the table. Back in the day, or even now, any company which wants to increase its share price, they would write what's trending. They would write something.ai on Wall Street or something.com on Wall Street. Today, I think anyone wants to make a pop on their share, just add Tata to that.
Maybe a little harder to do that than it is to put green in your name or AI in your name.
Just one thing,
guys.
Tata Chemicals, when the numbers that Hormuz put out, that was the 4th of March. But from then, the stock has gone from 950 to wherever it is now. And the P multiple, which Hormuz said, the intrinsic business, the value of Tata Chemicals X the value of Tata, the stake that Tata Sons holds, Tata Chemicals holds in Tata Sons, that's the intrinsic value. So Tata Chemicals will do about 1,000 rupees in FY25 earnings.
Right.
And the market cap, excluding the Tata Sons stake value, is now basically the business is trading at not 11 times, but 17.5 times. So it's, in 6 days, and there's been a dramatic re-rating which has happened.
And we also need to know that whether the value of Tata Sons that is being ascribed to the market cap of Tata Chemicals right now is considering any holding company discount or not. Because if it is, then what we'll have to see is that, the price to earnings multiple of the residual business will be a lot higher than 17.5 times. Because for Rallis India, people are ascribing a holding company discount. For Tata Sons, you can't just say that it's an 11 lakh crore market cap company of which it holds X%, and as a result of which this is the value.
I think for that 17.5 times number is based on a 30% discount to their value in Tata Sons.
Okay.
Of course, if the discount goes up or goes down, the multiples will change, but that's the 30% based on a 30% discount. So
Absolutely. Well, let's bring in Prakash Diwan onto the show then and get a comment going. Prakash, it's a Thursday that feels like a Friday, so we welcome you on the show nonetheless. Usually a Friday factor, but here we are. Tata's, the whole rally that's playing out, and Tata Chemicals, this absolute sort of stupendous rise. What do you make of it? What do you think is happening here?
So, Survi, good afternoon. So, I think this was a catch-up that was bound to happen. The only thing is that the trigger has come in as a loud potential listing of Tata Sons and the potential unlocking of value therefrom. And surprisingly, a lot of these things have been obvious for quite some time, but it's just that the market suddenly takes cognizance when it's collective wisdom that comes, right? So that's the case. But if you specifically, and I was listening to your conversation, Mangla, when you were talking about Tata Chemicals, remember Tata Chemicals, the numbers were a bit soft, given the fact that the soda ash spreads are probably, at the lowest. It's been trending downwards for a long time. Realizations have been a struggle. But if things look up, because that's what's expected, that they would have bottomed out, you would start seeing a very significant uptrend in its earnings capability also. And the second thing is, it's a company which is almost like an MNC. It has global operations across 13 locations. It does some excellent work in terms of green chemistry, and that is something eventually which is going to be a very, very formidable play within the battery solutions. So the batteries need a quick solution, which is what Tata Chemicals has the wherewithal to provide. When that happens, you'll probably have a re-rating on the fundamental basis of the business, standalone business itself. All this right now is more of unlocking a value which is intrinsically there, because that very complex cross-holding that the Tata Sons structure has always been holding. So, that's what has suddenly caught attention. And I would believe the same goes for some of the other names. Tata Steel has, in fact, more stake in Tata Sons than Chemicals as well. Tata Motors has some significant amount. So all of that, but then they have their own tailwinds also on the business that's kind of helping them. So it's not just only on the news of Tata Sons listing, but it's also that these are going through a phase of expansion for their own reasons, and rightfully so. So I would believe people will need to realize that you have potential within the names like Tata Power, Tata Motors, Tata Chemicals, even on a standalone basis. So there's no harm in holding on to these if you have that, or maybe adding them to the portfolio at some point in time with a slightly medium to long-term perspective.
By the way, I just want to also point out, given all the buzz that's there in the market, another one that I heard was that perhaps there's some anticipation building up about a Tata Capital listing. And then there will be cross-holdings there and maybe some value unlocking. But again, this is not confirmed. This is a lot of the speculation and the buzz that's doing the rounds on the street, leading to the kind of, huge upsurge we're seeing on a lot of these Tata Group companies.
Continuing the wordplay, let's just call it a Tata Thursday. Well, let's move on. City gas distribution companies. I mean, it's been such a day that, it started with all things city gas distribution. There was breaking news that came by. We had the conversation with the member of PNGRB. Some of the stocks are mildly in the green, a large part of them mildly in the red, after seeing a big decline as well. In case you missed all of that and want to understand what exactly has happened in this space, Sonal joins in with a complete explainer. Sonal.
Well, yes, the city gas distribution space is abuzz, and this time not for the best reason. So let's break it down and tell you what is exactly happening in the space. The three companies, be it IGL, MGL and Gujarat Gas, all three of them have cut prices. IGL and MGL, they've done it for their CNG segments, and Gujarat Gas has done it for the industrial segment. And all of them have cited lower natural gas or their raw material prices going down for this price cut. But price cuts are usual course of business. So why did the stocks fall so much? Well, this is because at the same time, Oil Minister in a press conference said that gas sector reforms, they have not reached the end consumers at a time when government is focusing on affordable gas prices, and added that they are worried about high profits earned by these companies, and the government is ready to take steps with respect to pricing and ensure compliance by these companies as well. That is not it. The PNGRB yesterday also uploaded a document that indicated that Mahanagar Gas's exclusivity in Mumbai region ended in 2021. That means they will not have exclusive rights to this region when it comes to CNG sales, which could impact their volumes. Now, before we look at this impact, let's try and understand what kind of margins these companies are making. In Q3, MGL made the highest margins at 13.3 rupees per SCM, followed by IGL at 7 rupees, and then Gujarat Gas at 4.8 rupees. Of course, MGL and IGL, they have highest exposure to CNG space, and these have direct impact on retail consumers. Now, in terms of profits, IGL profit margins, they've been between 15 to 16% in last 4 years, and 19 to 20% is for MGL. This is just in last 2 years. Now, what got the street worried in that case? One, they are worried about government's intervention with respect to pricing in the CGD sector, which has been market-driven so far. And second, the exclusivity issues for some of these companies, which could end soon, leading to more competition and less volumes. So there would be a hit on both margins and volumes as well. Now, we spoke to the PNGRB, the regulator that is, and they indicated that they received no communication from ministry regarding curbing CGD pricing, and there's no intention to intervene or regulating or getting into the day-to-day activities as well. They are in favor of market freedom. Profit level is 20% in CGD infrastructure, and they're not saying CGDs are making any supernormal profits, but ideally they should make 12 to 15% profit margin, which is reasonable according to them. But right now, these companies are making profits which are 20% higher than the current levels. Now, this is what the street is worried about. A lot of commentary, and that is something that the street is watching out for. But what next? First, the end of exclusivity for CGD companies is still sub judice. And there's no final decision awaited on this. This can extend by 10 plus years given precedents and could happen for MGL as well. Second, regulating profits for CGDs would mean lower capex in the sector, and this would be a conflict with government's goal of expanding gas economy and infrastructure as well. So what are the brokerages making of this? MK, for instance, says such comments closer to elections are expected given that petrol and diesel price cuts are also long awaited. However, pricing freedom should endure and stay linked to market forces, and nothing has really changed for this sector. Nuvama says more than half the price cut by MGL is led by easing spot prices, and hence they are still more popular or more competitive than petrol and diesel prices, and hence volume boost is likely. The PNGRB stated MGL's Mumbai monopoly ended in April, but nothing can move forward till pending court cases are resolved. ICICI Securities says that technically, the PNGRB cannot allow for regulation of end consumer prices, and the signals that they are getting from the pronouncements may indicate further lowering of priority gas allocation to CGDs. This could impact their margins. For CGDs, they are also puzzled that there is a need by the regulator to increase penetration, and at the same time, they are talking about lower profits as well. And this is what the street is worried about. There are mixed signals that they're getting, and there could be further price cuts as well, and it could continue pressure on these companies. So it is an important space, and we have to track that closely.
All right, Sonal, thanks a lot for that. Prakash is still with us. Prakash, your thoughts on city gas distribution companies? Do you think this decline offers an entry point, or maybe you're worried about what happens from a regulatory standpoint here on?
Well, I think the regulator is actually trying to manage expectations and mitigate a lot of the apprehensions that people have in terms of the kind of price controls that would come in. But the fundamental reason, we spoke about this a couple of days back when we were talking about the impact of the Morbi units on Gujarat Gas and some of the micro markets. It's so simple, Manglam. The need for gas usage is so high that there's no way you can kind of upset the apple cart too much. And most city gas distribution networks have fortunately done a lot of expansion, invested a lot of capital into expanding their networks. There's a lot of last mile connectivity, which I can personally vouch for. I've seen in the case of MGL and all in the Delhi, in the Mumbai and the greater Mumbai region. That once the volumes pick up, these people will start seeing very good return ratios emerge on the balance sheets, and that is something which helps them re-rate. And once it becomes like an annuity kind of a cash flow for most of the larger players, with the supply of gas being absolutely uninterrupted, and there's lots happening on the back end on that side also. The way Qatar and all have been very aggressive on supplying gas, I would believe CGD will become a very veritable and a very insulated kind of a business model. I'm quite positive on that. Any dip that you get because of certain sentimental triggers or some news flow driven moves, it's a great this thing. Of course, you can select and pick what you like given the individual business models and metrics, but I think as a sector, it's definitely got a lot of promise.
The question is, what's a good price to buy, right? I mean, that's the thing. And there, I mean, generally, broadly, the feedback is that maybe there will be more price cuts. Be mindful of that as we kind of go along. Prakash, hi. Two names I wanted your thoughts on. Chola Finance, which is seeing a 5.5% pop. I'm not sure what's happened with SBFC, Small Business Finance, which from the morning is down 9%.
There was a block. That was one reason, but apart from that, fundamentals.
But that seems to be the only news point in that.
Nothing
sense.
else.
There's nothing else.
Yeah.
We had the management with us yesterday. Nothing in terms of business or anything. Anything you've heard? These two names?
So on SBFC, I echo what Survi is saying. The overhang of this significant quantum, and I think Abhishek did a small piece on that, which I went through. It's more to do with some of these finance companies, the NBFCs, which are not the same league as the Chola or Shriram or something. They will need to kind of do things to be able to be relevant to the growth expectations that are built into prices. And if you look at Chola, it's a very simple thing. They are probably the only tier one company that remains absolutely unassailable in terms of what they can do to grow. They mentioned about the growth expectation, which is far more higher than all the other players in the industry, though they are very conservative. And remember, the underlying segments that they are focused on, to the geographies that they are focused on, we'll see a huge significant revival once the cycle turns benign or positively. I mean, right now it's going through a trough of sorts, which probably should bottom out. the numbers tell you, whether it's Tata Motors, Eicher, Ashok Leyland, all of that. But the market that they're sitting on will definitely be ripe for the picking. The other thing that you need to look in this space, Prashant, is what's not working for some of the players. Like, we saw what happened to IIFL. And that's a significant advantage to the likes of Muthoot, which have never compromised on what they want to do and focus on in terms of quality build-up. They've been a bit slower than some of the aggressive growth players like IIFL. They've not tried inching a market share just for the sake of that. But they've really grown their book in a very qualitative way. And with gold prices being so supportive, I think it's so easy to kind of pick Muthoot and just sit on it, and they will start benefiting from this shift that's happening on market share. So I would look at some of those players opportunistically rather than worry about what's happening to the rest of the market in the NBFC pack.
All right, take that point, Prakash. Thank you so much for joining us. Wish you a very happy long weekend. Rest well, relax, and then we'll speak again on Monday with a fresh new lens for where the markets are. Speaking about the markets, a lot of action in the media space. Z Entertainment up at the high point right now as we speak, and that's not the only media stock which is doing well. Pull up something like a DB Corp, that too is locked in a 5% upper circuit, and with, of course, the usual disclosures, a decent move underway on Network 18 and TV18 as well. Network 18 up 4%, TV18 another 3% being added to that counter. So this is a space which is buzzing. Take a short break, come back. On the other side, we have Amit Jeswani, who's the founder and CIO at Stallion Asset, joining in with his views.
Well, if you're going to try too hard to fit in, you're never going to be able to stand out. So my message to every woman out there, trust your gut, trust your instinct, be yourself. Don't let anyone tell you what you can or cannot do. It is your time. It is your time to shine.
All right, welcome back. 20 points on the Nifty. It's green, 22,500, almost there. 20,500 is where we are trading at. I mean, actually, let me just take a look at the weekly change. The Bank Nifty, if we end here, is going to be about 1%, 1.25% higher. And the Nifty is going to be about 0.5% higher this week. I think the small cap index should be down. Yeah, the small cap index will have a negative weekly close, almost 3% Friday to Friday, Friday to Thursday actually, since today is the last day of the week. Amit Jeswani is with us, founder and Chief Investment Officer at Stallion Asset Private Limited. Amit, great to have you with us here on the program. Thanks very much. Correct me if I'm wrong, but I remember a couple of interactions back, you said that you were buying Polycab. And this is when the price had corrected, etc. And I think it's back at the price from where it fell, Amit. So you've made good money for your investors. So congratulations first up. And I mean, if you want to comment on that particular situation, do you still own that position? And lately, what have you been up to?
Good afternoon, Prashant. Thank you so much for having me on your show. Prashant, yes, we do own Polycab. I don't think that position is done as much that I expected to do. I think picture abhi baki hai. And this quarter should be a very decent quarter. It was gaining market share very aggressively last quarter when you compare it to RR Kabel, KEI, etc. Polycab is a hyperscaler and it's a market leader with growth north of 20%. So I would say that for FY24, like the upcoming quarter, this is what I expect. You should, if they don't have anything very wrong on the income tax problem, we should be back to new highs in Polycab. So it's still very cheap. I expect them to make 600, 650 crores of profit this quarter, 1,800, 1,850 crores of profit this year. The stock is still very cheap here. So I'm fairly bullish on Polycab. And what are we doing? Actually, we're just increasing our portfolio quality. So in a bull market, Prashant, typically to make some alphas, 5-10% of your portfolio goes down a little less on the quality curve. So because you want to expand your alphas, like last year, our alpha 35%. So we were on that melt up mode. Our only goal was to expand alpha because you were in a very strong bull market. Right now, I would say that we think post Fed, the breadth has peaked. The bull market is still alive, but the breadth, these are two different things. The bull market keeps going on, but the breadth peaks typically 6-9 months before the bull market. So the breadth has peaked and you want to up your quality curve of your portfolio and you want to keep making better portfolio choices. You want to be in more secular companies. You want to be more assured of growth. You want to be in market leaders only because we've already made a lot of money. No sense in losing money at all.
Right. So what does it mean when you mean that you are increasing your quality or improving quality of your portfolio? What names would they be? Essentially, the ones who are traditionally considered quality, or some who might not be, traditionally considered quality, but you think are quality? I mean, how do you define quality is what we are trying to understand.
For example, OFSS this quarter, the numbers, OFSS is Oracle numbers this quarter was mind-blowing. This company is typically grown at 5% and you had a massive earnings beat. The valuation was too cheap for the stock to sustain. That is, if the growth stays at 5%, you don't make much money. But if the growth actually changes and becomes like 20% or 15%, you end up making massive amounts of money. But we've already made very decent money within the first 1 month. So I'm saying you still are on the higher side of the quality curve. You're still chasing growth. That doesn't change. Like we would be happy if Indigo comes with a block. That is one stock that we are eyeing very aggressively. If you see Indigo last quarter also gained market share across the crisis. This year's free cash flow should be 14,000 crores, 8,000 crores of PAT, and today's market cap is about 1,15,000 to 1,20,000 crores. The industry's terminal growth rate is 15%. So every year the industry will keep growing at 15-20%. And typically, if you see 20% growing companies in India, like a Varun Beverages now trades at 90 times TTM, Titan trades at 95 times. So I'm not saying that Indigo will ever trade at 95 times. It's not possible. But that's the valuation. Like DMart with 20% growth trades at 95p. So the markets have decided that consumer monopolies, and this is not me, this is the markets who have decided that consumer monopolies who can grow at 20% will now trade at 90 to 100p. But this is bull market valuations, of course. But this is how the market thinks, and you'll have to think. And if you grow more than the 20% level, and you have a large terminal value like Trent does, then markets will give you at least 100p or better.
Interesting analysis over there, because the market has rewarded some of these names that you mentioned in a big way. Aviation, well, let's see. But yeah, it's true that it is getting to a near monopoly sort of situation for a carrier like Indigo. Fares are going up, and crude oil prices have been largely stable. So take that point. You know, speaking of going up the quality curve, I don't know, I mean, whether you managed to dodge a couple of these bullets in the NBFC space, because I remember our last chat, I think you do have Bajaj Finance in the portfolio, but look at the action, you know, and these are specific capital market related entities, and you know, one or the other business has been targeted by the Reserve Bank, JM Financial, IIFL Finance. What do you make of this? Because there was also a lot of chatter in the market about giving better valuations to wealth managers, for instance. I mean, Angel One has done really well. Nuvama Wealth has been on people's radar. How are you looking at the non-lending financials now, given what's going on?
So on the capital market, we've got three names in our portfolio. We have Angel One, who's gaining market share. Unfortunately, they came with a QIP. We've never understood why they came with a QIP, but we still have Angel One in our portfolio because very aggressively they're gaining market share. We expect profit will be near 400 crores this quarter for Angel One. So it looks very cheap, Angel One to us. The growth in the first 2 months, Angel One, the growth has been 100%, like on average, like 95, 100% in the number of orders. We typically we get very happy when we get 30, 40% growth companies. This is something else which is happening in capital markets. MCX should grow at 60, 70% based on the 2 months of data that we have. And MCX will start reporting profits this quarter. Nuvama has done very well. In fact, Nuvama's profit, the stock has also done very well. We've made decent money in no time. We just bought it like 1.5 quarters back after the demerger. The stock's done well. The growth of, if you see, even in the wealth management part, Nuvama's growth has been 38%. Anand Rathi is at 30%. IIFL is very less growth rate. So basically, Nuvama is still the fastest growing company in the wealth management space, yet the cheapest. MCX should get re-rated. MCX, we expect about 500 crores PAT next year. And you can keep tracking monthly data and make your decisions based on data which is coming. So capital markets, we are still very bullish. Capital market cycle started in September, October this year. Typically, cycles are 18 months long. Let's see, we can go wrong also, but we have a location. We have about 16% of our portfolio in capital markets. On NBFCs, we have about 8 or 9% of our portfolio in NBFCs. It's been very painful having 8-9% in NBFCs. We've lost alphas. But it is what it is. You can't expect. It started with Bajaj Finance. It then went to Paytm, then IIFL, then JM. So these are first of a kind. Like only yesterday, I was out for dinner with NBFC, a CEO, and he was just saying that these are things which are unexpected. And even they have become a little scared about what is happening.
I think you last time we spoke, you said you own Bajaj Finance, of course, Arman and 5-Star as well, right? I mean, some of the others in that space.
None of them are doing well. So,
did you guys go Dutch or did you pick up the tab? Or did they pick up the tab? I'm just joking. Dinner? No, nothing. I mean, I'm just kidding.
Who paid for the dinner is what he's asking.
The NBFC CEO dinner, Amit, is what we're wondering.
I didn't pay for the dinner. I'm already paying a lot of money for the stock prices. So
absolutely. Okay, now on a serious note, so like Polycab, right? I mean, there have been other accidents as well in the market, Amit. You look at hospitals, there have been sharp drawdowns. NBFCs, of course, we sort of discussed. Gas companies, city gas distribution companies, again, sharp corrections here. Now, not all need to work out like Polycab, but any interest at all in any of these names, in any of these sectors where there is a big difference in how the market perception is going, and you know the underlying state of the business, which may be different?
Actually, hospital is a massive terminal risk. If the Supreme Court and regulatory risks are today the biggest risk that everyone's worried about. And if anything, if the Supreme Court does what it's saying, that this will be a massive terminal risk for hospital stocks. And we had one hospital stock, which was Narayana Hrudayalaya. We sold Narayana Hrudayalaya this quarter because the growth was 6%. And for us, we've got just so many opportunities. We cannot take the 6% growth. It's very tough for us to handle 6% growth and then sleep in the night. So we removed Narayana Hrudayalaya. We bought one Ayurveda company, very small company, but our like hospital is one space where you have terminal risk, and I would wait for this Supreme Court judgment to get cleared before betting big on hospitals. It's okay if you buy 10% higher. The best in class guys, everyone knows it. It's Max, Medanta. Those are the guys you wanna like. These are guys who know how to execute, make it large, and these are the guys who I would buy if things are okay. In next 1-2 months, you'll come to know everything. Supreme Court has given only 1 month's time for the government.
Just wondering if that Ayurveda company was Kerala Ayurveda as well, very small, just about 300 crores market cap. But finally, I wanted your thoughts on these new age companies, because I remember you did sell Paytm, you continued to hold Zomato. Is anything in that space looking attractive? Delivery, a lot of people believe that the operating leverage will come by for them.
Delivery this quarter was good. We have only two names, Policybazaar and Zomato. They are about now 15%, 16% of our portfolio. These stocks have done very well for us, and we continue to own them. See, Zomato, this quarter growth was 69%. Policybazaar growth was 40%. I'm expecting next quarter Zomato growth to be 81%. Policybazaar Q4 is the strongest quarter. Policybazaar already turned PAT positive this quarter, and Q4 is the best quarter. So you want to hold them. You want to enjoy the ride. See, Mangalam, these are market leaders or duopolies. Our patterns of investing is the same. We want the highest growth. If we buy Trent, we want the highest growth. In QSR, you track consumers so well. You see Devyani, Jubilant, Best Life, they're all growing single digits. And you've got one player, thanks to Blinkit, which is now growing at 70-80% in a consumer type companies. These are unreal kind of, and at scale. So when you have such kind of opportunities where Polycap should grow at 35% this quarter, Trent at 50%, those are kinds of bet where you can make sizable money. And it's not like we bought, all these are already up 2, 3, 4x for us. We are just riding the trend until the time they keep
hence the question on delivery, because in a logistics industry where there is not a lot of growth, delivery is the one which is the fastest growing.
Yeah, but for me, the minimum growth standard today is 30%, because I've got alternates which are growing at faster rates. So except Mankind and things which are completely defensives and part of our portfolio, my minimum growth standard for me to now invest, because India is growing so well, and when your nominal GDP is growing at 14%, and we need only 20-25 promoters who are creating monopolies and growing at very high rates. When you get those kind of promoters, is only then we buy. We are growth investors, and we need consumer-facing growth companies who are market leaders, high ROC at reasonable initial valuation, and then we keep riding till we have a better alternate. Like if DMart, we used to have DMart in our portfolio. Now also we have 0.5% weight, and we sold our DMart to buy Trent, because DMart grows to 20%. 18, 19, 20%. We are not interested in 18, 19%. From selling DMart at 4,000, 4,200 levels, we bought Trent at 1,200, 1,300 levels, because Trent was growing at 30, 40%. And today, Trent and DMart trade at the same price. Tomorrow, if DMart grows at 30%, we'll add DMart and probably sell something else which is not growing in our portfolio. We will always be in good quality companies, and we'll always be in the highest growth of that sector.
All right, 30% is a North Star for Amit. That's
30% high ROC, good promoters, and monopoly in the business. It has to be consumer facing. That's like he could have asked for some stars, some moon, and
but
on the side.
I would say kudos to him, because we've been looking at the portfolio, and you've managed to dodge a lot of the bullets. You've got a lot of the hits, including Trent, including Angel One, and so many of the other stocks that we've discussed. So kudos to your team.
He's not dodging bullets. He's the one firing the bullets.
Also, yeah.
Amit, great to speak with you, Amit. It's a pleasure as always, and lovely chat. And thank you for that perspective across a range of businesses. Thank you. Well, Amit Jaswani of Stallion Asset with that perspective. 33 points higher on the Nifty. We are at 22,500 plus as things stand right now. We'll take a quick commercial break here. We are back. D Street Chatter with Nimesh as always, and of course some trading ideas as well. Stay tuned.
Dream Sports presents News 18 Rising Bharat Summit in partnership with Hindustan Times. Coming soon.
Welcome back. You're with us on Closing Bell. Let's straight away get to Nimesh to figure out what the buzz has been like in dealing rooms today in our segment D Street Chatter. Nimesh, tell us, what have you picked up? Markets change its color back to more positive ways now by the end of the week.
Oh, absolutely. Even yesterday we saw a big pullback, and so is the case in today's trade as well. So the momentum of pullback continues in today's market. And the good part is the breadth has improved dramatically in today's market. So the mid-cap index is up 0.5%, but there are a lot of individual names which have pulled back and are up 5-10% in today's market, especially in the broader markets. And even the flows have turned positive. So I understand there's going to be a small market close basket buying as well at a leading FID. So that's going to help further in terms of the momentum to build up. In terms of sectors, two sectors stands out today as far as flows are concerned. One is clearly the pharma names. So it looks like there is a pharma basket buying, and a lot of pharma stocks are seeing a buying interest from the large institutions. And the momentum buying in the PSU bank stocks continues. So these two sectors clearly stand out. But as I said, the second half of yesterday and today seems to be a good momentum pullback and led by some FI buying as well.
Okay, and what is in your list, Nimesh?
Well, Prashant, I wanted to start with a block deal, otherwise you'll ask me why no block in my list. So the first name is Indus Tower. The stock has been consolidating off late. Some big positive reports as well from Citi and a couple other brokerages. But now I understand there's going to be a large block deal in Indus Tower very soon. So that's something to try going forward. The second name is L&T Holding Finance. We saw a big cut in yesterday's trade, but looks like the dip is getting bought across the NBFCs. And L&T Finance stands out on back of strong buy flows from larger HNIs. It looks like some HNI interest is back in that particular stock. The third name is JM Finance. While the stock has recovered, the stock did recover yesterday as well and up and is green in today's market as well. But the street is fearing some further regulatory action very soon. So that's something to track in JM Financial. And the last is Dooms. I understand there is a limit, price limit buy orders from larger FIs in today's trade. And a couple of large HNI investors also seems to be quite active buyers in Dooms of late. So it's a little illiquid stock, but some bit of buying interest seems to be back.
No, I saw some brokerage coverage as well, initiating coverage. This was yesterday. I think IIFL initiated coverage with a price target of almost 1900, some 30% upside. Nimesh, interesting list as always. Thanks very much for that heads up, and we'll keep a track of some of these names. Mitesh is with us with what to buy or sell today for a reverse trade on Monday. Mitesh, over to you.
So I have a BTST on Tech Mahindra. I think the IT names have started reversing. Maybe they'll see some good momentum next week. So BTST here with a stop at 1278 and look for a target of up to around 1305, 1310, maybe even higher depending upon how strong the reversal is. But it does look like it's heading on the upside. And the other stock which I like, on the short side is Apollo Tires. That's STBT with a stop at 521 and look for targets of 505.
Okay. All right, Mitesh, thanks very much for all the trading calls. You have a good 3-day weekend and we'll look forward to connecting again bright and fresh on Monday morning. By the way, just pull up UCO Bank because there's some volatility on the stock. It was down about 2.5% last I checked. The CBI has released a statement. Now, it seems that the CBI has been investigating over the past couple of months transactions which amount about 820 crores. These are IMPS transactions. Looks like they could be potentially fraudulent, spurious, suspicious to say the least. And that is what the stock is reacting to right now. And this is a mammoth investigation spreading across the Rajasthan and Maharashtra. Basically, the amount was credited into multiple UCO Bank accounts, whereas it was not debited from the originating bank. So let's just watch this space. Some volatility on the stock over there. Let's quickly move on and say hi to Ambarish Baliga, our next guest on the show. Ambarish, good to have you on and good afternoon to you. First of all, let's start with your pick. You like Astral. Tell us why.
Yeah, exactly. It's among the largest and the fastest growing companies in building materials with presence across pipes and adhesives. And now they are forayed into paints, faucets, sanitary ware, water tanks and valves. They were pioneers in India for CPVC as well as lead-free UPVC pipes and plumbing systems. Close to about 22 manufacturing units, 2,700 distributors, nearly 2 lakh dealers. So that's the huge network for them. The management seems confident of 15 to 20% CAGR based on the real estate and infra growth, as well as the government focus on various schemes like Pradhan Mantri Krishi Sinchai Yojana, Nal Se Jal, which is under Jal Jeevan Mission, and the Pradhan Mantri Awas Yojana, PMAY. So all these will contribute to their growth. The stock has been consolidating for quite some time. I think the last 8-9 months has been consolidating, and now it's actually breaking out. I'm in fact expecting an EPS of about 31 for FY26, and with this, the target is about 2,635.
Amrish, more questions coming your way, and in just a bit. We'll take a break here. We are back, and we'll have more on the other side in just a bit from now. Stay with us.
Welcome back. A little flat on the Nifty now. Some of the movers and shakers actually this hour include Tata Consumer having a good session, and actually the leader on the Nifty, up about 3.5%. Amrish, just your thoughts on a lot of these Tata Group stocks. That's been the story of the day. Okay, by the way, speaking of the Tata Group, there are some news updates coming through. There is a tariff hike that has been approved for Tata Power. This is excellent news, and it's twice the amount that was requested by the company. Average tariff hike of 24%. So this is phenomenal news that seems to be coming in for this one particular stock. And it's anyway been quite a mammoth rally today. Amrish, any thoughts on Tata Power or any of the other group stocks? They've all had a very good run.
In fact, I've been quite positive on Tata Power, I think, for the last, 2.5 years, and all the targets have been achieved. Now, I think it can still move up, I think, based on this news, because it's extremely good news for Tata Power. So I think it can go to levels of that 450, 460. Tata Consumer also, there is more upside. Tata Motors, that news is already out, and I think that's been absorbed to a large extent. So Tata Motors possibly could, in fact, remain in this range. Because I think the demerger is going to take about a year or so. So I really don't see Tata Motors going much beyond that 1,050, 1,100 levels.
This is, of course, a tariff hike for Mumbai that Tata Power had asked for. So all us Mumbaikers, where the power is being supplied by this particular utility, get ready to pay for your bills. But of course, for the stock, for the company, it is great news. A 24% increase in tariff being approved by the Maharashtra State Electricity Regulatory Commission. Amrish, finally, just talking about the whole mid-cap shakeout that we've seen this week, what do you make of it? It's a very shallow correction, lasted all of 2-3 days. But sort of any fresh buy ideas that are coming in, or any stocks where you would now advise sort of lightening positions after the rally?
No, I think if people are making good money, it's time to actually lighten out to a certain extent, because whenever a correction comes in mid-cap and small caps, it could be a very deep one, because most of the valuations are, like really too high and very difficult to justify. But then since money is flowing into that, because of liquidity, these stocks are moving up. But then still, there are quite a few which I would still recommend buying at this point of time. I think one of the stocks we're talking about, delivery, I think there's still a decent upside from here. And there's a stock like Krishna Diagnostic, where in fact I have a target price of about 875. So, there are pockets where you could see some more upside. But, overall, I think one should be cautious, because we have seen so many multi-baggers. And normally when we talk of multi-baggers, we talk of multi-baggers over a longer period of time, 2 years, 3 years. Here we have seen so many multi-baggers in a couple of months. So I think it's quite difficult for it to sustain like this for too much longer. I think before elections, it's time to take a decent amount of money home.
Okay, so perhaps tread with some caution, and some profit booking is advisable. Amrish, good to have you on the show. Thank you very much for joining in. Good to get that perspective. Well, we are all set to wind down the day and the week, and it's getting really quiet out there. You'd have to say that the Nifty is probably going to go home with a gain of just about 10 points, or just about in double digits. The sensex already turning negative, so there was some cool-off that's coming through as we look at the long weekend. Of course, there is a jobs report that we'll have to react to only on Monday now. So bunched up cues also coming in. Anyway, let's talk about the large cap screen first up, what worked and what didn't. In terms of movers on the upside, it's been all about the Tata Group, as we've been saying. So Tata Steel, 3.5% higher. Tata Consumer, 3.5% on the upside. Tata Motors has put on about 2% as well. TCS is up about 1%. These are the major Tata Group movers on the Nifty. Bajaj Auto having a good session, 3% higher. And then you have a couple of the metal names. Apart from Tata Steel, even JSW Steel, Hindalco. So the metal stocks had a pretty decent run. Some names from the consumer space did well today. ITC is one of them, 1.5% higher. Asian Paints, again, about 1.5% up and about. So not a bad move here. And then the financial services twins from the Bajaj stable, Bajaj Finance and Finserv. Both of these NBFC stocks have had a 2% sort of a move for themselves. So that's the list of the gainers. Now, if I talk about what didn't work, M&M with the block deal happening, where promoters have believed to offload some stake, 4% down on that stock that was weighing. Reliance was a clear underperformer throughout the session today, 1.5% gone from Reliance. And the banks were a disappointment. So if anybody thought that yesterday was the start of a new big bank trade, that wasn't to be. In fact, the Bank Nifty has had a very significant and very clear underperformance today, down about 0.4%. And constituents will come up for you: Kotak Mahindra Bank, ICICI Bank, most of them ending the session on the way down. The bell has gone. Very quickly on the mid-cap side of the screen, again, beyond the, I must sort of conclude even here with the Tata Group. Look at Tata Chemicals, look at some of the other stocks like Rallis India, or even something like a Tata Tele. Big moves coming in over there. Some of the wind energy players like Suzlon have ended positive. Some of these companies, Suzlon included, clarified to us that this whole reverse auction mechanism is not going to impact the company much. It's really a non-event for them. So 5% up on that stock. Those are some of the key movers and shakers. And then you've got Irida from the PSU space. Some PSU gainers as well coming through. Hudco, Irida. These are some of the names. Even IRFC, some PSUs on the green side of the screen. Well, with that, it is a wrap on this edition of Closing Bell. Many thanks for being with us today and through the week. But don't go anywhere, because a special edition of Editors Roundtable is coming up next.